Hey everybody, it's not a Tuesday, it's a Thursday. I'm here with Trish. So we're getting lots of questions from folks regarding loans, some key questions, what grants are available, how much down or how little down, or can I get away with no money down? We're also getting questions from folks regarding jumbo loans, those higher loans above conforming loans. And we also want to cover actually what's new, some exciting new changes with Fannie Mae, Freddie Mac criteria. So Trish is here with me. She's from Guild Mortgage. Say
hi everybody.
Trish. All right. So Trish, thanks for coming.
Nice to see you, Dom.
All right. We were going to go over loans today, since loans are your thing. You've been with Guild Mortgage. You've been in the loan industry for how long, Trish?
15 years.
15 years. Oh my God. Okay. So people are asking us all the time, what's the story with the grants? Okay. How much are they able to get? What are they able to get? What's the kind of criteria? So high level, just throw it out there for people so they can start to think about it.
Okay, so our Nevada grant programs, you get 5% as your closing costs and down payment. You have to have a 640 credit score. It can go conventional, FHA, VA, USDA. Each program has different limits and has different criteria. And of course, you have to call Trish Kirsch at Guild Mortgage to find out more about each program.
So that's 5% of the loan value.
5% of the loan value, not on the sales price. It never has to be repaid, and it's a one-time use. You can get the grant one time only.
Okay, so if you're an owner-occupier, you can get this grant.
Correct.
If you're an investor,
You can't get the grant.
you can't get the grant.
Primary residence only.
If you have got the grant before, how long has the grant been around? A few years?
Yeah, about 3 years.
About 3 years, okay? You can't get it again.
Correct.
So it's a one-time only.
Correct.
All right. Any other drawbacks of the grant? Because I remember when we were in California, in San Jose, there was a grant program long ago, but it was actually like a silent second.
Mm-hmm.
Any drawbacks with this one?
No, it's a great program. Yeah, I use it a lot. You do not have to be a first-time home buyer. Anyone can use the grant. You have income guidelines, and again, they change for each program. And it never again has to be repaid. So it's a great product for people out there to use.
Okay, fantastic. So it's not a silent second. There's no drawback when you sell the property 2-3 years down the road.
Nope.
But you do have to live in the house and you have to be an owner-occupier.
Correct.
Okay, cool. So that's the grant program. Does it always have to be 5% or can it be less?
Sometimes people only take 3 or 4%, it depends. I have to sit down with every buyer to figure out which program works best for them and their needs. It also has different interest rates. So again, the more money you take, the higher your interest rate's going to be, and the lower the grant, the lower the interest rate. And again, it depends on if it's FHA, conventional, USDA, or VA. All have different rates.
Okay. And is there an income limit?
There is an income limit. On government loans, it's $98,500, and on our conventional loans, it's $125. But again, these are area driven as well. So it's a really great idea for you to contact me, and I'll tell you.
Are you plugging yourself?
Yes, I'm plugging myself because there are too many programs to talk about just now in this video. But 98.5 is the magic number for most of the grants. Some of them allow 125. So again, it's just all different areas, different grants, and we would need to meet in person and go over all these programs.
Okay, awesome. That's great info on that one. So that's the grant program. So the other one we're getting lots and lots of questions on. People are finding it expensive at the moment to rent. Here in the Reno Sparks area, as well as in Incline, rents are going up all the time. So it's definitely getting there where a lot of people it's more cost effective for them to have a mortgage and have their monthly housing cost fixed as opposed to rents that are going up every year at the moment, even some of them several times a year. So people are asking us, Trish, what's the lowest down payment?
Well, as you see our sign here, VA is the lowest. It's 0 down. If you have the benefit of a veteran, that's awesome. You can get 0 down and use the grant for closing costs and get into the house. Absolutely cost you nothing. So that's a great program if you are a veteran. Guild Mortgage offers their own grant program. You have to come in with 1% of your own funds. It cannot be gift money. 1% of your own money, and we will give you 2%, so you have immediate 3% equity in your property, you need no more money than that other than your closing costs.
Oh, so Guild gives them 2% and they bring in 1%, so they're doing 3%.
3% down,
But
total.
it's only 1% out of their pocket.
Correct. So
And
that's,
can you combine that with a grant?
you cannot. So if you get this, we give you the 2% and you come in with your 1 plus closing costs. You get a much better interest rate using our program. It's a 1 point less than what the grant is. So for people who are not rate sensitive, but they're payment sensitive, this is going to be the best program for you. Oh, way better than the grant program.
From a point of view of what your monthly payment
Correct.
is, for someone who's looking to just get some certainty around what their payment's going to be every month for the housing.
Correct.
Okay.
I favor this one over the Nevada grant program because it has a very low interest rate. And if you can get into this for 3% total, why would you need to take the bigger grant? Just to me, this is better. It keeps your payment low, and it never has to be repaid, same as the other grant. Then we have FHA.
But you got to be an owner-occupier.
Absolutely. All grants, anytime you're going to get money from a lender or from the state of any state, you are going to have to be owner-occupied.
You mean you don't give away money to investors?
No, I know. I wish. And then we have FHA loan, and an FHA loan is 3.5% down payment, and you can couple that with the grant, not the Guild grant, but with the Nevada grant. And sometimes we will also get some the seller to pay some closing costs, so it keeps your costs down. And that's when you talk to the expert, Donald Minihan.
So yeah, so that's really important, you know, because there's so many programs out there right now. So working with a lender who knows those programs, knows the grant programs, but having that communication between us on the real estate side and you on the lending side, it really allows us to zone in and perfect that offer so it's optimal for the buyer and also for the seller, because the seller wants certainty their home is going to close. But having that communication so we know really, really clearly how we can structure that offer to make it work. Any other advantages of an FHA?
No.
She says no, but there are some other advantages. I mean, folks are going to be able to qualify for FHA because it's more tolerant if you've had a foreclosure in the past or a short sale in the past than a conventional.
Who's the lender here? That's true. So if we're having a credit problem, we have bankruptcy, short sale, foreclosure, time period, waiting periods are much shorter going FHA. If we're maybe struggling with some credit scores, we're going to go FHA. If we don't have a lot of credit, we're going to be going into an FHA loan. Conventional loans are a little pickier. You have to have better credit. This, I forgot to mention, on the Guild mortgage grant program, you do have to have a 680 credit score. So if you don't fit into that box, then we're going to go to the Nevada grant program.
And maybe FHA.
And maybe even FHA.
Okay, cool. So we've got a loan program here, FHA, that's much more tolerant for buyers who've had issues in the past or don't have perfect credit or whatever. Guild, great if you can meet all that criteria because you get a really good interest rate of 1% down.
Correct. And one program we don't have on here is USDA, and USDA is for select areas like Fernley, Fallon, Sun Valley, Dayton. There's some areas that are pretty close to Reno, Lemon Valley, some pockets of it, some pockets of Spanish Springs that will go USDA. And that's a zero down program as well, but it's also pretty selective on your debt to income ratios, on your credit scores. So we have to just, again, if it fits into that box, then it's a wonderful program because it's zero down.
And it's pretty good interest rates too, doesn't USDA?
They'll probably be the lowest of all.
Okay, interesting. But again, USDA is a rural program, so downtown Reno isn't going to qualify.
Yeah, it's definitely going to be in some select areas.
And I don't think Incline Village qualifies either.
Yeah, no Lake Tahoe.
All right. Okay, Incline Village. There you go. So jumbo loans. Trish, there's lots of people out there. We've seen prices go up. I think we said prices have gone up on average about 22,000 in the past 12 months. But we're seeing more and more people fitting into the jumbo loan category compared to a few years ago where they were fitting into, say, conventional. What's out there for these folks, and what's a jumbo loan?
Okay, the jumbo loan is anything over $424,100. So if we're into $100 more than that and we can't come up with the difference, we're going to be in a jumbo product.
And that's in Washoe County?
That's correct. And that's Washoe County's including Incline Village, so they have to adhere to our conventional guidelines. And I think one of our best programs out there is a 5% down jumbo. That's pretty cheap, 5% down, you're getting into a jumbo product. It is a 10-1 arm only, so it's fixed for 10 years, and after that 10th year is over, we're going to start floating onto a LIBOR. So LIBOR is really hard to explain, and we'll do that in another video. But for 10 years, most people aren't keeping homes for 10 years. The interest rate on a 10-1 arm is 3.875, so it's super
That's fantastic. Yeah, we saw a lot of folks in the Bay Area start to move over into 10-year arms or 7-year arms because they weren't expecting to hold those houses for that amount of time, and they got really good interest rates. Obviously, the risk with an arm is your interest rate is going to float after that 10-year period.
Right.
So that's your risk. So that's your 5%. What else can they do? They can do 10 or more?
Well, we have we have another program. It's 10% down. It's fixed for 30 years. I locked somebody today on that at 4%. That's a fantastic 4% for a jumbo. It's cheaper. Actually, jumbo money is cheaper than conventional money. So it's not a bad thing to be in a jumbo loan. But you do have to have really, really good credit.
So your criteria for the loan
very stringent.
For the borrower is higher.
Very high. The bar is up here for jumbo loans. We need a 740 at least credit score. We have to have money in the bank. We have to have no blemishes on our credit. We can't have bankruptcy, short sales. It's very picky. So.
But then again, you're getting a jumbo loan at 4%. So
right.
Yeah, it has its benefits. Cool. So a jumbo loan, no limit to how high it goes?
Well, yeah, depends on the product. Again, these are all great lender questions when you're sitting in front of your loan officer, and we go over each program what's going to fit your needs, because there's so many jumbo products out there, and everybody's different, what they're looking for and what's best fits their criteria. But if they want 5% down, you have to be in this program. There isn't any other one out there.
Fantastic, fantastic. So there's other programs. We're not going over everything today. We'll go over some of the professional programs later, like the doctor programs or that sort of stuff. But let's just keep it more general today. All right, so that's jumbo loans. Now, we were on the phone earlier today and you said to me, hey, there's something really new coming next week in relation to criteria for loans. Do you want to let everybody know what it is? Yeah,
so Fannie Mae is changing their guidelines to allow our debt-to-income ratio go up to 50%, which is huge. It's been at 45%. So to go up to 50 is fantastic for us, very exciting. I have a lot of buyers that we are struggling with their debt-to-income ratio, and we're waiting for this guideline to take place. The switches on Sunday night. So Monday we'll rerun our desktop underwriter, which is Fannie Mae's underwriting system, and we will get an approval, and then we'll close their loan. And that's what we're waiting for.
So is this like just for conventional or
just for conventional?
So does that bring it in line now with FHA or?
Definitely will get a better debt to income ratio, because FHA will allow sometimes even over 50 in certain cases, but 50 is generally the guideline for FHA and VA. Again, everybody's different, every loan program's different, but that's just general criteria is 50%. So this is really big for Fannie to be going up to 50%.
So that's fantastic. That's fantastic.
Helps a lot of our buyers.
Because you're going to have some people now who are thinking they had to go FHA and have mortgage insurance, and they're able to switch over to conventional.
Yeah, or they can just buy more house now.
Oh, they can buy more house? There you go. Oh. All right, so what else do we have? What else do we have? Oh yeah, that was our big thing somewhere. All righty. So, yeah, that kind of brings us to the end of it for today. Anything else you want to throw in there, Trish?
It's a great time to buy right now. Interest rates are low. Houses are going up in value. And some of my clients want to wait a year. And I'm like, why? Why would you wait a year? If you're renting, you're going to get a tax deduction. If you're a first-time home buyer, you're going to get a tax credit and a tax deduction, and it just makes...
How much is the credit?
$2,000 for a first-time home buyer, and that's a great credit. They don't give a lot of credits. You get electric car credits, you get educational credits, child care credits, and you can get the first-time home buyer tax credit. And it really is fantastic. Basically, it's $166 in your pocket every month to get this credit.
Wow. And what's a first-time home buyer?
First time home buyer, anyone who hasn't owned a home in 3 years.
In 3 years. That could be a lot of people.
Yeah.
That could be a lot of people. Fantastic. So, yeah, if you have any questions thinking of buying or selling, give the Minihan Group a call. The number is 775-800-3809. My email, donal@theminihangroup.com, or just go on the website, theminihangroup.com. We're on Facebook. Remax Professionals is on Facebook. We're on Instagram. So we're trying to put value items out there all the time. So have a look and or let us know what you want to know, and we can put it on a new video. So Trish, this is your contact details. So Trish is at 775-848-8166, and or you can email Trish at tkirsch@gillmortgage.com. I nearly gave you my email address. Trish also has a team, so you could speak with Hannah or Brianna.
Right.
Okay, fantastic.
Thank you.
Awesome. Any questions, let us know. Thanks. Bye.